Indicators on my charts. For day trading, I keep my charts relatively clean with a minimal number of indicators displayed. In day trading, you need to process information quickly and you need to make decisions very, very quickly. Therefore, I cannot keep track of too many indicators. Here is what I have on my charts. 1. Price action in the form of candlesticks. 2. Volume of shares being traded. 3. 9 exponential moving average. 4. 20 exponential moving average. 5. 50 simple moving average. 6. 200 simple moving average. 7. Volume weighted average price. 8. Previous day's closing price. All of the above indicators are automatically being calculated and plotted by my DAS Trader Pro platform. I do not find, calculate or plot these manually. I'll explain these terms later on in this book. 9. Daily levels of support or resistance. For daily levels of support or resistance, my platform does not automatically find and plot them. These levels have to be identified manually by traders. I usually find and plot these levels during my pre-market screening for stocks in play on my watch list, or during the day when a new stock hits my scanners. I don't trade without knowing nearby significant intraday levels of support or resistance. I keep the color of all my moving average indicators in gray except VWAP, which is colored in blue. VWAP is the most important day trading indicator and needs to be easily and quickly distinguished from other moving averages. I don't want to have a lot of colors on my charts, so I maintain a white background with mostly red and black coloring. Heavily colored charts are confusing and over the long term irritate your eyes and limit your vision. I avoid dark background colors on my charts because they make my eyes feel achy and weak when processing dark colors for any length of time. Figure 5.2. Below is a screenshot of the type of chart I use with my indicators marked on it. Figure 5.2- screenshot of the type of chart I use with my indicators marked on it. Only 200 SMA is not shown because it was moving outside of the zoomed price range. Buy and sell orders. Essentially, there are three important types of orders you can use for day trading. 1. Market orders. 2. Limit orders. 3. Marketable limit orders. Market orders. Buy me at any price. Now. Sell me at any price. Now. When you use market orders, you are asking your broker to immediately buy or sell the stock for you at any cost. Let me repeat that, at any cost. If you place a market order, it will be filled at the current price, whatever that happens to be. A limit order, on the other hand, allows you to specify the maximum or minimum price you will accept. In market orders, essentially, you are getting filled at the bad side of bid-ask spreads. A market order buys at the ask and sells at the bid. The problem with using market orders is that the market can quickly change, and so then does the bid-ask spread, and thus you may get your order filled at a very bad price. For example, if the bid-ask spread is $10.95 minus $10.97, market orders should buy immediately at $10.97 for you, right? When your market orders come to the exchange, the market can quickly change to $11.10 minus $11.15, and therefore your buy market order will be filled at $11.15. That is a 15-cent slippage, and that is really bad. Market makers and many professional traders make a good living from filling market orders. I discourage traders from placing market orders at any time. A market order is like a blank check. Most of the time a market order will be filled very closely to the quoted bid or ask price, but sometimes you will get a nasty surprise. Use limit orders whenever possible. Limit orders. Buy me at this price only, not higher. Sell me at this price only, not lower. A limit order, in contrast to a market order, limits the price you are willing to pay for the stock. You specify the number of shares you want to buy and the price you are willing to pay. For example, in the Level 2 screenshot below, marked as Figure 5.3, you will see I have two limit orders. I asked my broker to buy me 100 shares of Teva at $34.75, and another 100 shares at $34.74. You'll recall from before, size is the number of lots of shares, with one standard lot equaling 100 shares. As you can see, my orders are now sitting in Level 2, waiting to get filled. There is no guarantee that I will get filled at those prices. If the price moves higher, I will never get filled and my order will stay in the Level 2 until the price moves back down. Sometimes the order will come back partially filled because the price of the stock moved up too quickly. Swing traders commonly use limit orders. Figure 5.3- example of a Nasdaq Level 2 for Teva Pharmaceutical Industries in the middle of the day. I have two limit orders to buy in total 200 shares on the bid. Note that the number of shares is in hundreds. SMRT is the default clearing route for my broker, IB. Marketable limit orders. Buy me now, but up to this price. Not higher. Sell me now, but down to this price. Not lower. Thirdly, the most important type of order for day traders is a marketable limit order. Marketable limit orders, once sent, will immediately give you as many shares as possible within the price range you have set. In marketable limit orders, you ask your broker to buy or sell stock for you immediately, but you specify the highest price you are willing to pay. For example, in the above Figure 5.3, the Level 2 for Teva, you can ask your broker to buy 100 shares at ask price plus 5 cents. Your broker will go to the ask and try to fill your order. As you can see in the top three highlighted rows on the right-hand side of Figure 5.3, there are currently 1,100 shares offered at ask 100. Therefore, you should get filled immediately. But, if the ask price moves up quickly before you get filled, you have already authorized your broker to buy Teva for you at a higher price as well, up to $34.82. Therefore, your broker will try to buy 100 shares of Teva for you at a cost of no more than $34.82. A similar example is also true for selling or short selling on the bid. In selling on the bid, you specify the range you are willing to sell at. For example, if you ask your broker to sell at the bid minus 5 cents, it means that you are not willing to sell at a price lower than the bid minus 5 cents. I use marketable limit orders for all of my day trades. I typically buy at the ask plus 5 cents and sell at the bid 5 cents. In the next section, I will show you details of my order hotkeys. Hotkeys. Hotkeys are key commands that can be programmed to automatically send orders with the touch of a combination of keys on your keyboard. Professional traders will use hotkeys to enter trades, exit trades, place stop orders, and cancel orders. They don't use a mouse or any sort of manual order entry system. The use of hotkeys eliminates the delay of manual entry. The volatility of the market, especially at the open, can allow for huge profits if you can trade properly, but it can also result in significant losses if you fail to act quickly. Often, the proper use of hotkeys distinguishes the losers from the winners. Most of the day trading strategies I use require high-speed trading. In day trading, the market can move very fast, especially at the market open. Stocks can very quickly hit your entry or exit price, often in a matter of mere seconds. In order to be able to day trade effectively, it is important to use a trading platform that offers hotkeys. For high-speed trading, you should have all of the possible trade combinations in your hotkeys. In my opinion, it is almost impossible to day trade profitably without using hotkeys. The following Figure 5.4 is the list of my hotkeys in my DAS platform. Other platforms may use different scripts. It is best to check with your broker and trading platform support team to make sure you are familiar with how to write a proper script for your hotkeys. Figure 5.4 a chart showing some of my hotkeys for my DAS Trader platform. A complete detailed hotkeys script of my platform can be found on my website at Chart View. Hotkey 1 minute chart, F1 5-minute chart, F2 daily chart, F4 weekly chart, F5 monthly chart, F6 buying long. Buy 400 shares at limit ask plus 05. Alt plus 1 buy 200 shares at limit ask plus 05. Alt plus Q buy 100 shares at limit ask plus 05. Alt plus A. Sell 1, 2 position at limit bid dash 05. Alt plus 2 sell full position at limit bid dash dot 05. Alt plus 3. Selling short. Short 400 shares at limit bid dash dot 05. Alt plus 4 short SSR 400 shares at limit ask. Alt plus 5. Short 200 shares at limit bid dash dot 05. Alt plus R short SSR 200 shares at limit ask. Alt plus T. Short 100 shares at limit bid dash dot 05. Alt plus F short SSR 100 shares at limit ask. Alt plus G. Buy to cover 1, 2 position at limit ask plus 05. Alt plus 6 buy to cover full position at limit ask plus 05. Alt plus 7. For a long position, my buy orders are in blocks of 400, 200 and 100 shares. I use a marketable limit order to buy at the ask price plus 5 cents. My sell hotkeys are marketable limit orders to sell my half or full positions on the bid price minus 5 cents. When selling, I will accept the bid price and a price no more than 5 cents lower to ensure my order gets filled immediately. The DAS platform will automatically calculate what half of my position equals in number of shares. The computer will also calculate the current bid and ask prices and place my order at the price I specify. Similarly, for short positions, I short sell on the bid price or on a price no more than 5 cents lower. My buy to cover shorts hotkeys are marketable limit orders to buy my half or full positions on the ask price plus 5 cents. I am willing to pay higher prices to asks just to get my orders filled immediately. You may have noticed in figure 5.4 that I have different hotkeys for when a stock is in short selling restriction mode. An SSR is triggered when a stock is down 10% or more from the previous day's close. In that case, regulators and the exchanges restrict short selling of the stock when its price is dropping. You can only sell short on the ask. You cannot sell short directly to the buyers. It means that the priority for selling is for the sellers who currently hold positions, not for the short sellers who are wanting to profit from the downward movement. If you want to sell short, you have to queue up on the ask side and wait for buyers to come to you. Real sellers, on the other hand, can accept bids from buyers and get rid of their positions. The SSR is designed to give the real sellers, who own the stock, a priority to sell over the short sellers on the market. Therefore, when a stock is in SSR mode, I send my orders to sell on the ask, and then I must wait until my orders get filled. I cannot use a marketable limit order for short selling when a stock has a short selling restriction placed on it. For more information about SSR, Google it on the internet, send me an email, or check my website for additional information. The most important advantage of these hotkeys is that when a stock suddenly moves, you can press your hotkey to sell your full or half position on the bid without having to type in the new bid price or your number of shares. It is impossible to consistently profit from day trading without mastering hotkeys. Part of your education includes trading in simulators for a few months, and during these months, you must master your hotkeys. I have made many mistakes while using hotkeys, and you also no doubt will. That is part of the learning process in day trading. That is why it is extremely important to practice in real-time simulators and practice with hotkeys while you are mastering the trading strategies explained in Chapter 7. Hotkeys are an amazing tool, but they must be used with caution and with sufficient practice to prevent errors. Day trading is difficult enough. Don't let your hotkeys make it even more difficult. It is very common to make some mistakes when you are getting used to hotkeys. When I was learning to use them, I had stickers on my keyboard to help me to keep track of the different key combinations. When I try to define new hotkeys, I will ensure that I only practice with them in my simulator account. It takes some time, but eventually you will remember your hotkeys and use them efficiently. Another important reminder is to always use a wired keyboard that is plugged into your computer. Wireless keyboards can send repeat keystrokes, errant keystrokes, or can fail to send orders at all, especially when low in battery power. This could impact and quite simply mess with your trading. I have seen traders in difficult and costly situations because their wireless mouse or keyboard was low in battery power and did not work properly. I even keep one extra keyboard in my office, ready to go, just in case something happens to the keyboard I'm using. One time I spilled water on my keyboard while trading. My keyboard stopped working. Fortunately, I did not have any open position at that moment. I immediately purchased 2 new sets of keyboards and mice, and I keep one set as a backup next to my trading desk. Watch list and scanners. I talk to new traders almost every single day. I talk to hundreds of traders every month. One of the common challenges that new traders mention is not knowing what to trade. Thousands of stocks are moving in the market every single day, but finding a setup that is both consistent and a good fit is really hard. I use Trade Ideas software for scanning the market and finding good trades. As I mentioned earlier, for a link to their website, along with a special discount code, please check my website. I explained my scanners and watchlist building in Chapter 4, and I will explain in detail later in this book what I am looking for with my scanner as well as with my trading strategies. You will also see some pictures of my scanner in the sections that follow. If you join our chat room, you will see my scanner online in real time, and you will be able to observe how I use it. Community of traders. Trading alone is very difficult and can be emotionally overwhelming. To whom will you ask your questions? It is beneficial to join a community of traders and ask questions, talk to them if needed, learn new methods and strategies, get some hints and alerts about the stock market, and also make your own contributions. Online trading rooms are excellent places for meeting like-minded traders, and they can be powerful learning tools. 2 long-standing trading rooms are Linda Bradford-Rashk's trading room, which emphasizes technical trading across multiple markets, and the trading room run by author John Carter and Hubert Sanders. You should also take a look at the educational programs run by Jim Dalton and Terry Liberman as another possible place for connecting with like-minded traders. Another 2 well-known trading forums are Elite Trader, www.elitetrader.com, and Trade to Win Indeed. If you have a favorite trading platform or application, connecting with traders who are using the same tools can be quite valuable. Market Delta and Trade Ideas run educational programs and online chat rooms for their users that I've found useful. I personally trade in our chat room with some of my friends and family. We can talk to each other and everyone can view my live screen and platform and watch how I'm trading. It is a fun, interactive environment, and we all learn from each other. I frequently answer questions from other traders, and if there is anything I'm not sure of, I will ask other traders. There are some experienced traders in our chat room that I learn much from, and we tip each other off about potential good trades and setups. We would like to grow our chat room slightly, and therefore everyone who is reading this book is welcome to join with us. You will benefit from both watching me trade and hearing my responses to questions people have, including your own questions. Don't be shy to ask. New and developing traders will absorb the knowledge of mentors and experienced traders like a sponge. This helps them establish the right trading behaviors faster and more effectively. When you share your trading results and your ups and downs with fellow professionals, you turn social interaction into social learning. Find experienced traders who will not hesitate to tell you when you are making a mistake. It is in interacting with other traders that you will learn to teach yourself. If you join me, you will see that quite often I lose money. It is always a good feeling to see that losing money is not just limited to yourself, but that everyone, including experienced traders, have to take some losses. It is part of the process. There are many chatrooms that you can join on the internet. Some of them are free, but most of them require payment. You can join our chatroom and see my screen in real time while I am trading and explaining my strategy. You can take trades with me, or just watch and listen. You can also take your own trades and still be part of my community. If you are interested in watching me trade or in talking with me, check out our chatroom at. It is extremely important to remember, however, that if you are in any community of traders, either our chatroom or the dozens of others that are out there, you should not follow the pack. You need to be an independent thinker. Don't blindly follow the crowd, but to partake of the benefits inherent in being part of a trading community that fits with your personality. People often change when they join crowds and become more unquestioning and impulsive. Stressed traders nervously searching for a leader whose trades they can mirror. They react impulsively with the crowd instead of using their minds. Chatroom members may catch a few trends together, but they will also get killed together when trends reverse. Never forget that successful traders are independent thinkers. Simply use your judgment to decide when to trade and when to not.